Hello, Assalamu alaikum, student. This is your teacher Azka, and today this video is specifically for. So this video is for AS level students, and this is our paper one, Business 9609, and this is our latest paper, May June 2024, and we have 1 hour 15 minutes to solve the whole paper. But I basically solved this already. We just need to read and discuss the answers in this video. And in this video particularly, I've completed all variants: variant 1, variant 2, variant 3. So uh, from the start, we are going to talk about the variant 3. Okay, so as you can see that we have section A, and we have 4 questions to do in this, and this will carry 20 marks, and 20 marks for your section B. So, by the way, 2024 May June threshold was very high for paper one. It is, I think, um, A was on 35 marks. It means that out of 40, if you will gain 35 marks, so you will get A. So this is quite high. But Alhamdulillah, most of my students got A, and A in AS level and A star in A levels. Alhamdulillah. Okay. I don't know why this is not. Yeah, okay. So we have the section A. So first of all, we have some questions. We have to define the term direct cost, and we just need to write its definition. Okay. So here are the questions. I hope you can see it. Okay. So the first question is define the term direct cost. So here we just need to define the direct cost term. There is no need to write any example, but if you write the example, so it will not cause any negative marking. You will get your 2 marks. So direct cost is an expense that can directly attribute to the production of the specific product or service. For example, include raw materials and labor directly involved in the manufacturing process. So this would be the part of our direct cost. Second question is that explain one method of improving cash flow for a business. So we just need to explain one method. So one method of improving cash flow is reducing the inventory levels by adopting the just-in-time inventory management. So a business can minimize the amount of cash tied up in unsold stock, and this approach not only free up cash but also reduce the storage costs as a risk of inventory obsolescence. Okay. And the next question, we have to define the term added value. So added value refers to increase in worth of product or service as a result of particular process such as manufacturing, branding, marketing. It is difference between the selling price of a product and the cost of inputs used to produce it. B part is explain one quality an entrepreneur needs for success. So one essential quality an entrepreneur needs for success is resilience. It means that flexibility. Entrepreneurship is often involved facing setbacks, challenges, and failures. So resilience allows an entrepreneur to persevere through difficult times, learn from mistakes, and continue pushing forward toward their goals. And this persistence is crucial, navigating the uncertainties and risk inherent in starting a growing business. So this is very important quality. The next one is define the term primary sector. So primary research. So primary research involves the collection of new first-hand data directly from original source of a specific purpose, and this can be done through methods such as surveys, interviews, or experiments, and is tailored to specific needs of the research project. Third question is explain one limitation of a business using sampling. So one limitation of using sampling is a potential of for sampling bias, where a sample selected to representative of the entire population, and this can lead to inaccurate conclusion and poor business decisions based on the skewed data. For example, if a business samples only a specific demographic that does not accurately reflect its broader customer base, so findings may not be applicable to the entire market, and it potentially leading to ineffective marketing strategy or product offerings. So just give me 2 minutes. I'm just coming back, and you can just double tap on your screen and you can skip these 2 minutes. Okay, so now let's see the question 4. So analyze one possible impact on a business of operating over a maximum capacity. So operating over maximum capacity can lead to increased wear and tear on equipment, and which may result is in more frequent breakdowns and higher maintenance cost. Of course, if you are using your machinery more than its capacity, it means that you are running your machinery for a longer period of time. So it means that it may result in breakdown, and it would be giving you very higher maintenance cost. This overuse can also lead to employee fatigue. Of course, you have to, you know, you have to um, impose a very longer time period to on your employees, and that's why your employee will feeling fatigue. As a staff may be required work longer hours at a faster pace than is sustainable. So in the short term, this might result in lower productivity, decreased product quality, and an increased likelihood errors. Of course, it means that if the workers are not feeling well, so it means that productivity would be declining, which can harm the business reputation and customer satisfaction. Additionally, consistently operating over capacity can lead to higher risk of burnout among employees, potentially increasing turnover rates and further straining the business resources. And these factors combined can ultimately reduce the long-term efficiency and profitability of the business. So basically, we have completed our 5 mark question. And now we are going to see the five and the sixth part. So in the fifth part, we have the first question: analyze two benefits to workforce of McGregor theory X management and evaluate whether cooperation between management and the workforce is most important factor in the success of car manufacturer. Okay. Yeah. So McGregor theory X management assumes that employees are inherently lazy, lack ambition, and must be closely supervised and controlled through a top-down management approach. So first of all, because this is a 8 marker question, so first of all you need to explain the theory X management, that what is the McGregor theory X management, and after that you have to explain its two benefit. First of all, you have to identify the benefit. This will give you your knowledge marks, and after that you should analyze it while in the context of business. So first of all, as you can see that I have explained its definition, or you can say that I have explained that what is the theory X management, and now I am going to write its this is my knowledge, this is my knowledge, and this is also my knowledge, which in which basically I identify its benefit. So first benefit of using the McGregor theory is that it would be giving you a clear structure and expectations. So theory X management provides a clear and structured work environment. It means that, of course, if there are managers who are basically, they're controlling their subordinates, and they are not open for feedback. They are just here for commanding. So, of course, it means that this management will be giving us a very clear structure, that how to work, and the roles and tasks of each and every employee has been explained by the higher management. So that's why. So where roles and tasks expectations are well defined. For some employees, particularly those who prefer routine and stability, this clarity can reduce uncertainty and stress. It means that everyone know that okay, we have to do this certain number of tasks. So it means that it would be lessening their stress. Knowing exactly what is expected and having a consistent of guidelines can create a sense of security and help employee focus on their task without ambiguity. It means that there will no confusion. They know that how to work and what to do. This structure can also lead to higher efficiency. So as you can see that from here, I'm going to analyze. Basically, this is all the analysis that where I've discussed that if this thing, if the clear structure and expectation would there, so how this would be affecting your employees, that there would be no ambiguity, and now how this will be affecting our business. So this structure can lead to higher efficiency as employees are less likely to be distracted or uncertain about their duties. So this is my first point. And the second advantage would be increased supervision and support. So in a Theory X environment, managers closely supervise employees to ensure that tasks are completed according to the standards. For some employees, this close supervision can be beneficial as it provides constant feedback and support and helping them to improve their performance. Employees who struggle with self-motivation or lack of confidence to work independently may find this level of oversight reassuring, as it allows them to receive guidance and correction in real time, reducing the likelihood of mistakes and increasing their overall competence and confidence in their roles. So these are the two advantages I have discussed here. I hope you understand. Now we are going to see the part B. So this is the part B. Evaluate whether cooperation between management and workforce is a most important factor in the success of a car manufacturer. So first of all, you have to support this view. So as you can see that in the support of view, I have written 2 points, and in the challenging view, I also written the 2 points. And you can also do one more thing. You can start with the positive point, and you can link this negative point by writing however. And after that you can start your second positive point, and you can start with however, and you can link this point, this negative point, with this second positive point. So now it depends upon you that how you will take this question, how you want to write it. But both you can say the writing style is good and you will get the full marks. So first supporting view that yes, cooperation between management and the workforce is important. So first advantage we will see with this cooperation is that it would enhance productivity and efficiency. So this is my knowledge. So cooperation between management and workforce is crucial in a car manufacturing environment where precision and efficiency and coordination are essential, because a collaborative relationship ensures that management and employees work towards common goals, improving productivity and reducing errors. So, when employees feel that their input is valued and they are part of the decision making process, they are more likely to be motivated, committed, and engaged in work. So, this alignment between the management and the workforce can lead to smoother operations, faster production times, and high quality output, all of which are critical in a competitive industry like a car manufacturing. So as you can see that I have explained well, I have used some application point also. So now I am going to explain the number two, the good thing about this, improved innovation and problem solving. So automotive industry is constantly evolving with the new technology, regulations, and consumer preferences driving the need for continuous innovation. So cooperation between management and the workforce fosters a culture of open communication and idea sharing, which can lead to more effective problem solving and innovation. Employees on production floor often have first-hand knowledge of the challenges and inefficiencies in manufacturing processes, and their insights can lead to significant improvements. If management is willing to listen and collaborate, so this collaborative approach can give the manufacturer a competitive edge by enabling faster adaptation to market changes and development of innovative products and processes. So this is my second good point. But now there are some challenges. Okay, so what would be the challenges? So this is the first challenge, importance of other factors. It means that we can talk about the other factors also, which is crucial for the car manufacturing industry. So while cooperation is important, other factors may be equally or more critical to success of a car manufacturing. For instance, technological advancement is a key driver of a success in the automotive industry. Investing in cutting-edge manufacturing technologies such as automation, robotics, and AI can significantly improve production efficiency, reduce cost, and enhance product quality. A manufacturer that prioritizes technological innovation may achieve greater success than one that focuses primarily on cooperation between management and the workforce. Similarly, effective supply chain management is crucial for ensuring that materials and components are available when needed, avoiding production delays, and ensuring that the manufacturer can meet demand. So these are the other factors which is important, which is maybe equally or more than important, not only the collaboration. And the second thing is that a car market position and brand strength. So car manufacturer success also heavily depend upon its market position and brand strength. Strong branding, customer loyalty, and reputation for quality can drive sales and profitability even if internal competition is not optimal. In a highly competitive markets, manufacturers must differentiate themselves through their brand, product quality, and customer service. So these factors can sometimes outweigh internal cooperation, as the market perception of the brand can be deciding factor for the consumers. So, moreover, strategy decisions regarding market positioning, product design, and pricing may have a more direct impact on company success than internal collaboration alone. So, in conclusion, I have written that cooperation between management and the workforce is undoubtedly an important factor in the success of car manufacture, as it can lead to enhanced productivity, innovation, and employee engagement. However, it is not only critical factor. The technological advancements, effective supply chain management, and strong market position also play a vital role in determining a manufacturer's success. So, therefore, while corporations should be prioritize a holistic approach with that balances collaboration with other strategic priorities is likely to yield the best for a car manufacturer in highly competitive and rapidly evolving industry. So here basically I have supported one view. I have negating one view, that not only the collaboration, the other thing that also important. And I also suggest this business that this car manufacturer business should use a balanced approach. So this is my conclusion, or you can say uh, evaluation. Okay. So this is it. Now we are going to see the other question. Okay. So we have this question that analyze two benefits to a business of improving the sustainability of its operation, and supply chain management is the most important operation for a success of a large internet retailer. Evaluate this view. So the first question is analyze two benefits to a business of improving the sustainability of its operation. So improving sustainability operation can provide a business numerous in benefits, but yes, you have to first of all define this, that what is the sustainability, and after that you should write its pros. Okay, so enhance brand reputation and customer loyalty. This is the one. So as consumers become increasingly aware of environmental issue, they are more likely to support businesses that demonstrates commitment to sustainability. By improving the sustainability of its operations, business can enhance its brand reputation, positioning itself as a responsible and ethical company. And this positive image can attract environment conscious customer, increase customer loyalty, and differentiate the business from the competitors. And over time, it can lead to higher sales, market share, and long-term profitability, as customers are willing to pay a premium price for the product service that align with their values. This is the first advantage. Now let's discuss the second, cost savings and operational efficiency. So implementing sustainable practice often leads to increased efficiency and cost saving. For example, reducing the energy consumption, minimizing the waste, and optimizing resource can lower operating costs. Additionally, sustainable practices such as recycling, reusing materials, and reducing packaging can draw off reduce can reduce raw material costs and waste disposal fees. Over time, these savings can significantly improve the business bottom line. Furthermore, adopting sustainable technology and process can lead to innovation and improvement in product design, manufacturing, and supply chain management, further enhancing efficiency and competitiveness. Okay, so these are the two benefits of sustainability. Now let's going to see the B part. Supply chain management is most important operations factors for the success of large internet retailer. Evaluate this view. So again, I've written the supporting view and the challenging view, and after that I conclude my question. So first of all, critical role in reduce product availability and customer satisfaction. So supply chain management is crucial for ensuring that products are available when and where customers demand them. For a large internet retailer, the efficiency of its supply chain directly impacts its ability to fulfill orders promptly, which is essential for maintaining customer satisfaction and loyalty. A well-managed supply allows the retailers to keep inventory levels optimized, reducing the risk of stockouts or overstocking, and this efficiency not only minimize costs but also ensure that customers receive their product quickly and enhancing their shopping experience and increasing the likelihood of repeat business. So this is it. I have written its first positive point, that why the supply chain management is important for this retailer. And now we are going to see the second benefit, that is cost efficiency and comparative advantage. So effective SCM can significantly reduce operational cost by optimizing uh, procurement, production, and logistic processes for large internet retailer, which typically operates on thin margins. Reducing costs through efficient supply chain operations can be a key factor in maintaining profitability. And by negotiating better terms with suppliers, optimizing transportation routes, and utilizing warehousing efficiently, the retailer can lower expenses and pass on savings to customers. It means that in the form of reducing prices, thereby gaining a competitive edge in pricing. This cost advantage can be crucial in the highly competitive online market, where customers often compare prices across platforms before making a purchase. So this is the positive points that why the supply chain management is important. So now we are going to see that while SCM is crucial, but there is also importance of the technology and data management. So success of large internet retailer also heavily depends upon its technology, infrastructure, and data management capabilities. So ability to process large volume of transactions, manage customers' data, and provide a seamless online shopping experience is paramount. So advanced technology platforms enable the retailers to handle the high traffic, ensure data security, and personalize the shopping experience through data analytics. And these capabilities are crucial for customer retention and can be more influential in determining success than SCM alone, as they directly affect the user experience and retailers' ability to innovate and scale. So here you can see that I've explained well, I've analyzed well. I also talked about the application points, because where I discuss, ensure data security, large transactions, maintaining the online shopping experience for the customers. So all these my application points, because this is showing us that this is only related to the a large internet retailer. And the second thing is, which is customer service and marketing. So another important factor for the success of a large internet retailer, customer service and effective marketing. Even with an effective sales supply chain, the retailer must excel in customer service to handle issues like returns, refunds, and customer inquiries promptly and effectively. Poor customer service can damage the retailer's reputation, leading to lost sales and negative reviews. Similarly, strong marketing efforts are essential for driving traffic to the retailer website and converting visitors into customers. Effective marketing strategy, including search engine optimization, social media management, and targeted advertising, play a significant role in attracting and retaining the customers. So all these things are equally important, not only the SC. Okay. And after that, I have conclude that supply chain management is indeed a critical factor in the success of large retailers, particularly uh, in ensuring product availability, cost efficiency, and customer satisfaction. However, it is not sole determinant or determinant of success. The integration of advanced technology, data management, customer service, and marketing strategies are equally important in creating a competitive and sustainable business model. Therefore, while SCM is vital, a holistic approach that also prioritizes technology, customer engagement, and effective marketing is likely to yield the best results for a large retailer internet retailer, ensuring long-term success in dynamic and competitive market. So this is it. I have written my suggestion also. So we have done with the paper one, and now we are going to see the other paper. So this is my paper one, variant one. Uh, okay. So we have the first section A, and we need to solve this 2, 3, and 5 mark question. So let's see. Okay. So the first question is define the outsourcing. So outsourcing is a practice of hiring external companies or individuals to perform tasks, provide services, or handle operations that are typically done within the organization. And this allows business to focus on core activities, which potentially reducing cost. B part is explain one purpose of GIC. So JIC management involves maintaining higher levels of stock to safeguard against potential disruptions in supply or unexpected increase in demand. The primary purpose of JIC is to ensure that business can continue to operate smoothly, meet customer demands even there are delays or shortages from suppliers. This approach reduces risk of stockouts, which could lead to lost sales and dissatisfied customers. Second question is define the term salary. So salary is a fixed salary, regular payment typically paid on monthly or bi-weekly basis that an employee receives from an employer for their work or service. It is a predetermined amount, does not vary based on the number of hours worked. Next question, explain one impact on a business of training its employees. So training employees can lead to increased productivity as workers become more skilled and efficient in their roles, and this can improve the overall performance of the business, leading to higher quality products or services, better customer satisfaction, and potentially increase profitability. And additionally, well-trained employees may feel more valued and motivated, which can reduce the turnover rates, create more sustainable workforce. Third question is define the term industrial marketing. So industrial marketing refers to the marketing of goods and services from one business to another rather than to individual consumers. It typically involves the sale of products that are used in the production of other goods or process services such as machinery, raw material or components. Next question is explain one implication to a business to increase its sales and market share. So explain one implication. Okay. So one implication of market growth is it presents opportunities for a business to increase its sales and market share. As the overall market expands, a business can attract more customers and potentially increase its revenue. However, market growth can lead to increased competition as more business may enter the business market to take advantage of the growing demand, requiring the business continuously innovate and improve maintain its competitive. Yes. Analyze one impact on a workforce of effective communication of business objectives. So effective communication of business objectives can have a significant positive impact on the workforce when employees clearly understand the company's goal and their role in achieving them. They are more likely to feel motivated and engaged in their work, and this alignment of individual and organizational goals can lead to higher levels of productivity as employees work towards a common purpose. Additionally, effective communication fosters a sense of inclusion and transparency, which can improve job satisfaction and reduce turnover rates. So, employees are well informed about the company's objective, are also more likely to contribute ideas and innovative that align with the business strategic direction, further enhancing the company's ability to achieve its goals. So, again, I just like to take a 2 minutes break, and you can just double tap on the screen and you can skip this video for 1 minute. Okay, so I'm back. So we have section B. First question is analyze two limitation of using the number of employees to measure the size of a business. Evaluate whether small retail business have an important role in the economy. So this is the question. So analyze two limitation of using the number of employees to measure the size of the business. Okay. So first limitation is varied productivity levels. So number of employees does not account for the productivity or efficiency those employees. A company with fewer employees can be more productive and generate more revenue than a larger company with more employees if it uses advanced technology or has more skilled workers. For example, a tech company with a small, highly skilled workforce might produce more output and generate more revenue than a manufacturing firm with a large number of less skilled workers. So this makes the employee count an unreliable indicator of actual business size or economic impact. Second limitation would be outsourcing and automation. So modern business often rely on outsourcing or automation, which can significantly reduce the number of employees needed to operate. For instance, a business may outsource its IT customer service functions to another company, reducing its house employee count while still maintaining the large scale operations. Similarly, businesses that invest heavily on automation may have fewer employment but large output, indicating a substantial operational scale. So that is not reflected the employees number alone. Therefore, number of employees might understate the true scale of business that leverage these strategies. So this is my 8 marker question. Okay. So now let's see the part B. First one is evaluate whether small retail business have an important role in economy. So small retail business play a significant role in economy and their importance can be evaluated for from several perspectives. So this is my positive point, this is my negative point, and this is my conclusion. So first one would be economic contribution and job creation. So small retail business collectively contribute a substantial portion of the economy. They are often vital in creating jobs, especially in local communities. Small business typically employ a large segment of workforce, providing opportunities that might not be available in large corporations. So this employment helps to reduce unemployment rates and stimulate economic activity as employees spend their incomes on goods and services, further supporting the economy. Second one would be innovation and competition. So small retail business often drive innovation without the constraints the larger company might face. Small businesses can adapt quickly to market changes, experiment with new products, and cater to the niche market. So this innovation not only benefit consumers by providing a more choices and better products, but also pressure larger businesses to innovate, fostering healthy competition in the market. Okay, so this is my 2 points. So I'm going to skip this third point. I have written here, you can see it, but I suggest you that you should only write the 2 points. So, however, importance of the small retail business can be challenged by considering the following points. First one would be the economic vulnerability. So, small businesses are often more vulnerable to economic downturns, competition from large businesses, and changes in consumer behavior. They typically have They typically have fewer resources to withstand prolonged periods of low sales, leading to higher rates of business failure. And this vulnerability can lead to instability in employment and economic distribution, as small businesses may struggle to survive in challenging economic conditions. Second one would be the second disadvantage, or it is maybe not so much important, would be limited scale and influence. So while small businesses are numerous, so this individual economic impact is generally limited compared to large corporations. So large business often benefits from economies of scale, allowing them to operate more efficiently, offer lower prices, and invest in more extensive marketing and distribution network. So this can overshadow the role of small retail business, particularly in market where price and convenience are significantly factors of consumers. So this is the challenges for the small businesses. Now I'm going to write my conclusion. So in my point of view, despite the challenges and the limitations they face, small retail business have an undeniably important role in the economy. They contribute to job creation, foster innovation, and support local economies, all of which are crucial for healthy and dynamic economic environment. However, their importance must be balanced with the recognition that they also face significant challenges and their role may be overshadowed by large business in certain contexts. So ultimately, the health of the economy depends on the diverse ecosystem where both small and large businesses can thrive, contributing to economic resilience and growth. Okay, so now let's see the second question, the second part of this paper. Okay, so this is the second part. Analyze two factors which may influence a business choice of source of finance. Evaluate whether setting budget is important to success of farming business. Okay. So this is my first question that analyze two factors which may influence business choice of source of finance. So first would be the cost of finance. Cost of finance is critical factor in determining which source of funding a business might choose. This includes the interest rates on loan, cost of issuing shares, and any other fees associated with obtaining finance. For instance, debt financing such as bank loans typically involves interest payments that must be regardless of the business profitability. So in contrast, the equity financing, while it might not require the regular payments, often involves giving up a portion of ownership and future profits. So business must weigh these costs against their financial projection and profitability to choose the most affordable option that align with their financial strategy. So a business strong cash flow may prefer debt due to the tax deductibility of interest payments, whereas business in a high growth phase might prefer equity to avoid regular outflows. Now let's see the second point, the second benefit, the second uh, choice, the factor. And a second factor would be control and ownership. So another crucial factor is important on control and ownership for business. For example, equity financing involves selling shares of a company and which duties dilutes the current owner control over the business, and this might be less appealing to owners who wish to maintain decision making authority and avoid the influence of outside investors. On the other hand, debt financing does not dilute ownership but comes with the obligation to repay borrowed funds with the interest. Business that highly control might opt for debt over equity to they provide they can manage the repayment obligations. So alternatively, a company might choose to retain full ownership and instead opt for internal financing such as using retained earnings if available. So this is the factors. These are the factors, and now we are going to see the 12 marker question that evaluate whether setting budget is important to the success of farming business. Okay. So first of all, I've written that yes, this is important, and its first advantage is financial control and planning. So budget are essential tools for financial control, enabling farm managers to plan and monitor income and expenses. By setting budgets, farmers can predict cash flows, allocate resources efficiently, and ensure that funds are available for essential operations such as purchasing seeds, fertilizers, and equipment. This financial discipline helps to avoid overspending, reduce wastage, and ensures that farm maintains solvent, especially during lean periods or when unexpected expenses arise. A well-structured budget also allows farmers to assess the profitability of different crops or livestock, making informed decisions that can optimize their overall return on investment. Second advantage would be the risk management. Farming is inherently risky due to factors such as weather conditions, market price fluctuations, and pests and diseases that can impact crop yields or livestock health. Setting budgets allows farms to plan for these uncertainties by creating financial buffers or contingency funds. For example, a budget might include a reserve for unexpected costs or investment in risk mitigation strategies, such as crop insurance. This proactive approach can help stabilize the firm's financial performance even when external conditions are unfavorable, reducing the likelihood of severe financial distress. Okay, so now I'm going to write my however it means the negative points. First one would be, however, it is important to consider the following challenges. First one would be variability and uncertainty. So agriculture sector is characterized by a high degree of variability and uncertainty, making accurate budgeting difficult. Factors like unpredictable weather patterns, changing market price, and biological nature of farming can cause significant deviations from the budgeted figures. And this uncertainty can undermine the effectiveness of budgets as planning tools, leading to either over or underestimation of revenues and cost. So, if a budget is too rigid, it might not allow the flexibility need to respond to the changing conditions, which can determinantal in a highly variable industry like farming. Okay. Number two is resource intensive. Developing and maintaining accurate budgets in resource intensive, requiring time, effort, and often specialized knowledge that small or a family run farmers might lack. The process of gathering data, forecasting, and monitoring actual performance against the budget can take time away from core farming activities. Additionally, smaller farmers might not have the access to sophisticated financial tools or advisors, making the budgeting process less precise and potentially useful. This resource demand can be barrier to effective budgeting, particularly for those farms operating with limited manpower and financial expertise. In conclusion, while setting budgets can be challenging due to inherent uncertainty in farming and resource required to maintain them, they remain a critical component of financial planning and risk management. So budgets help farming business allocate resources effectively, prepare for uncertainties, and maintain financial discipline, which are all essential for long-term success. However, for budgets to truly effective, they need to be flexible, enough to adopt the unique challenges for farming, and process must be tailored to the specific needs and capacities of the farm. In this way, budgeting can be a powerful tool that supports the sustainability and growth of farming business is in an unpredictable environment. Now let's see. the next paper, and this paper is paper 1 variant 2. So we are going to discuss the section A first. So this is my section A. Define the term takeover. So takeover is a process in which one company acquires control of the other company, purchasing a majority of its shares, and this can be either friendly or hostile action, depending on the whether target company management agree to acquisition. Second one would be explain one disadvantage to a business of external growth. One disadvantage of external growth, such as through mergers or takeovers, it is a potential for cultural clashes between merging companies. When two businesses come together, differences in corporate culture, management style, and employee expectations can lead to misunderstanding and conflicts and decrease employee morale. These challenges can disrupt operations, slow down the integration process, and potentially undermine the anticipated benefits of the external growth strategy. Second one would be define the term job description. A job description is a document that outlines the key duties, responsibilities, qualifications, and expectations for a specific job role within an organization. It serves as a guide for both employer and employees, ensuring clarity about what is required in the position. Second one would be explain one benefit to a business of internal recruitment. One benefit of internal recruitment is that it can boost employee morale motivation by promoting from within business demonstrate that it values its employees' growth and development and which can lead to increased loyalty and reduce turnover. Additionally, internal recruits are already familiar with the company's culture and process, leading to quicker and smoother transition into new role, thereby reducing the time and cost associated with the onboarding. Next question, define the term job production. So job production is a manufacturing process in which single product is created from start to finish before and whether it is another one is begin. This method is typically used for custom or specialized products where each item is tailored to the specific requirements of the customers. Next question is explain one benefit to a business of capital intensive operations. So it means that they are talking about the uh, production in which there are more machinery than the labors. Okay, so one benefit of capital intensive operation is potential for higher productivity and efficiency. By investing in advanced machinery and technology, a business can automate process, reduce labor cost, and increase the speed of consistency of production. This can lead to lower unit cost, higher output, and improved profitability, especially in industries where economies of scale are important. Okay. Last question is for 4 mark, 5 mark. Analyze when why analyze one reason why product differentiation may be important to a business. Okay. Product differentiation is important to a business, but it allows the company to stand out in a competitive market by offering a unique product that has distinct features, qualities, or branding compared to competitors. A business can attract a specific target market, command higher prices, and build brand loyalty. Differentiation can reduce price competition, such as consumer may be willing to pay more for a product that they perceive as superior or better suited for their needs. This uniqueness can also create a competitive advantage, allowing the business to secure a strong market positions and potentially increase market share. Ultimately, product differentiation helps a business to create and maintain a unique identity, which is crucial for long term success in crowded and uncompetitive markets. Okay, so now we are going to see the next question. Question number 5. Analyze two limitations to a business using contribution costing. Evaluate whether working capital is the most important source of finance for a startup furniture manufacturer. Okay. So first limitation would be contribution costing, also known as marginal costing, is a method where only variable costs are charged to the cost unit and fixed costs are treated to as a period cost. While this method provides a valuable insights, it has certain limitations. First one would be exclusion of fixed cost. So one significant limitation of contribution costing is that it ignores fixed costs when determining the cost of product or services. Fixed costs such as rent, salary, insurance are necessary expenses for the business to operate, and their exclusion can result in misleading conclusions about the true profitability of individual products. This approach can lead managers to make decisions that increase short-term profits but may harm the business in the long run. For example, a product that appears to contribute positively to profit based on contribution margin might actually be unprofitable when the fixed costs are allocated to it, leading to potential misallocation of resource or poor pricing strategy. Number two, Number two limitation is limited usefulness for long-term decision making. Contribution costing is primarily used for short-term decision making, such as determining the profitability of products or services in the short run. However, it has limited usefulness for long-term strategic decisions. Since fixed costs are excluded, this method does not provide a complete picture of the overall cost structure of the business, which is essential for long-term planning such as capital investment or expansion. For example, if a business focuses solely on contribution margins, it might overlook the need for covered long-term fixed costs such as new equipment, technology upgrades, which are critical for sustainable growth. These limitations highlight that while contribution costing can be useful for certain types of decision, relying on it exclusively can lead to incomplete analysis, potential detrimental decisions, particularly in terms of long-term planning and resource allocation. So these are the two disadvantages of using uh, contribution costing. B part is evaluate whether working capital is the most important source of finance for a startup furniture manufacturer. Okay. So working capital, which refers to the funds used for day-to-day operation, is crucial for business, particularly for a startup. However, its important relative to other sources of finance can vary depending on यहाँ से start करते हैं. Importance of working capital. For a startup furniture manufacturer, working capital is vital for purchasing raw materials, paying labor costs, and covering the other operational expenses such as utilities and rent. Given that furniture manufacturing involves significant lead times for the purchase of raw materials to the sale of finished products, having sufficient working capital ensures that a business can maintain smooth operations and meet its obligations without interruption. A lack of working capital could lead to production delays, missed deadlines, and a potential loss of customers, which could be particularly damaging for a startup trying to establish reputation in the market. Now, we are going to discuss its challenges. However, while working capital is necessary, it might not be sufficient as sole or most important source of finance for startup furniture manufacture. Startups often require substantial initial investment in capital assets such as machinery, factory space, and delivery vehicles. These expenses are typically better financed through long-term sources of finance, such as loans or equity investment rather than working capital. Relying too heavily on working capital to finance these long-term needs could strain the business cash flow, making it difficult to cover day-to-day operational costs. Other sources of finance